Hello, 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 everyone. Mike Arnold here, as always, co-founder of Pat Trading Partners, along with Bob Iacino, who should be on tomorrow afternoon again. How did everyone do today? Finally got that sort of late day breakout fading though after the close. I was watching for some key levels to hold and pulled back, so we shall see. We shall see. Let's see who's here. Hello, 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 Wavy. Three back-to-back green days. This is a pretty weak sauce rally, though, overall. Hello, hello, Christoph. Looking for 4,000 on the S to start loading shorts again. It's got some heavy lifting to do to get there. I'm not saying it's not possible, but oof, it's really got to get a push going sooner rather than later, especially where the cycles are running, and there's still lots of selling pressure in. Hello, Patrick. Good evening, Anissa. Hey, hey, Dan Jet. Again, everybody hiding in the background. Also, thank you for being here. So, real quick, by the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. We're making that push for 5,000 subscribers, which would be pretty interesting for a technical analysis channel. All right, we got that out of the way. So, let's prep. Let's prep for overnight. Sorry, my allergies are bugging me. By the way, we had S&P composite and services final beat, both beat. So that was interesting. No contraction there, and then ISM also came in higher than forecast. Where did my numbers go? Where did my numbers go? Huh, there we go. They're back. All right. Yeah, ISM beat. And what was interesting is employment contracted, everything else. Price is still high, pull back a little. But business activity was a pretty strong beat. So little softening in employment, but everything else was expansion. And I don't think the market knew how to react to that really. Stayed in the range till after the FOMC minutes. Jolt's job openings down from the previous, but still a little better than forecast. So we're gonna have to see how non-farm payrolls goes on Friday. FOMC minutes to me just reiterated the bullish stance from the I couldn't say the hawkish stance, not bullish stance, the hawkish stance from the Fed. You see, I had the bullish stance on my mind. Tomorrow we got ADP employment numbers minor. As remember, there's not a strong correlation with the non-farm payrolls, which is Friday. We have continuing jobless claims and initial jobless claims an hour before the market opens, 7:30 Central Time. We have a bunch of crude numbers coming out. We got a couple Fed speaks at noon. Fed speaks, but I don't know what they're gonna say. The minutes were very bullish, unless they're spotting data that shows them inflation is starting to step back to what would make them more comfortable with a 50 basis point hike. But again, from the minutes today, it's definitely 50, probably 75. Heat map today, you still had some mega caps holding up stuff. That was your major plays today in some mega caps. And FOMC climbing back up to close to 94% for that 75 basis points and still a negative gamma. So that's out of the way now. Let's see. Hey, George, welcome, welcome, welcome. Amazon put spread 195 for another earnings only cost me 65 bucks. So we can take a look. Remind me to take a look at that. Good day, Davey. Hey, John, just got back from Lake Tahoe. Any news with the stock market? We finally going to the moon? I don't think we're going to the moon. But we will take a look. What I'm watching is we've had this, as Wavy said, we got that nice little 3-day rally. This was a very labored rally. A very labored rally. You see cycles approaching the top on the daily and at the top area again on the weekly. So even on a push and Wavy, I can't give you individual advice, but that 4,000 might be a little aggressive because you got the weekly rotation zone about 39.24, and on the daily, again, You got the 50 exponential, which is a pretty strong one, and 39.89 harmonic. We bounced off the 62 and a half. Remember, I said that was my next focus with the daily rotation zone, bouncing off that and no close above it yet. So if this doesn't get a move on, cycles are going to get to the top and roll over with the weekly cycles, and then we favor more downside price action. So it's got, as I said, some heavy lifting to do to get up to this area. Does that mean it can't get up into this area? It could very well. That's what I'm going to be watching for if we do push higher. But this was very labored price action. You see, hot in that range. Here was the key levels I was watching that we had from this morning. This 38.49, this 38.13. And when I talk about stuff, you don't just, this is why I stress, you don't want to jump on these mini spikes. You want to watch for a break and a retest of that area. So this afternoon, we had the minutes come out, you know, a little delayed reaction. Then we got some momentum. We got the break and then the retest and then an upwards close running up to that 62 and a half. That's the kind of price action I like to see. Even if you didn't get this one that pulled back and then you got the rotation up. And yeah, it didn't sustain the pop, but you got to the next key level and trailing a stop. You could have, at least, worst case, you broke even. You know, you don't let this kind of thing turn into a loser. So that's the the people who get hurt, they buy these little breaks above there, and you get seriously burned. That's why I'd rather miss a trade, or I like to close above there. You got some momentum ignition, the break, the retest, the close, and if you miss that one, the second retest, and there's always not a second retest, but then you get the rotation back up. Just want to point that out to people. All right, so let's get back to here. 1 hour. I'm going to see, look, on the 1 hour, yeah, dip below there, but that's holding right there. So if we start dropping below about this 38.49, 38.50 area, I'm paying attention to the middle of this zone. Why? We start getting, especially with Europe, we start getting closes below here, about 38.30. Then I'm going to watch for the potential breakdown on the other side, because this would have sucked people in on the breakout play. Could not get that close above the 62 and a half and going back down. But first, the early warning sign is the close below the middle of this horizontal channel. To the upside, easy target 38.73 again. You start getting closing action above there. The next major target is your 3,900. All right. You're getting a little separation, but we still have 20 minutes before this closes. It's going to be interesting to see if this still sustains a close above 38.50. A drop below 38.13, same levels as earlier, 37.81 that I am using. So, and smack dab into that daily rotation zone and that 62.5. That's why you don't want to ignore that 62.5. All right. Let's see who else is here. Yeah, GM, GameStop. That's why again we're not at the bottom yet. Oh, really, GameStop? Oh boy. You know, when it popped up, I saw that it popped up after hours. Like that's okay. It's just a stock split. We're still in 2021 mindset. Hey, Amit, how you doing? Busy at the office and glad it's over. Need to catch up yesterday and today's video. Yeah, I think I've been throwing in a little more teaching stuff. Let me get to remind me in a bit, Amit, on Tesla and Netflix. Let me get through a couple of these, and then we'll get back to those. When capitulation? Well, we need we don't have any setup for a capitulation move right now. And you don't have to get a capitulation move. We could get a capitulation move for a minor bear or a more substantial bear market rally, but not off this price action. This is not a setup for a capitulation move. You're going to find your capitulation moves after a series like this, but we never got the capitulation bottom here. This did not trigger. I listed, remember, back here, I listed we could have a potential setup for a capitulation bottom. That never happened. We just got a reversal move. And what I'm reiterating also is capitulation bottoms, then you generally get that stronger rally. We do not have any kind of setup right now for a capitulation bottom. So that's off the table. I'm going to be setting up on a continued rally for looking for new short setups. You know what? And the only thing that gets me short until then is if we broke back down below 37.44 because I don't have a great topping pattern yet. And as I said, the only minor thing I'd be getting is if we got the shake and bake pattern back into this clear path move, but that would be a short-term short, not a more longer, not a medium-term short, because you could still get down there, come back into this buying zone. I start getting more aggressively looking for different kind of short breakdown plays if we get below this 37.40 area. You see with these three bottoms. So that's the key areas. That's why we analyze both sides of the market. And I was really going to watch for that above that 62.5 because then I get the statistical odds in my favor for a retest of this upper area, and we didn't get the close there yet. So, not that I care either way, it would just have shifted the odds in my favor for a play for the rest of the week. And we're still at this, trading moment to moment. And it gets exhausting. These markets can get exhausting. At least for me, they get exhausting. You know, these are not easy markets to trade because these follow-through moves haven't even been strong. So let's see here. Any important data coming up before the CPI? Yes, we still have non-farm payroll Friday. And that's going to take, we're starting to see some labor things weaken. Now, not substantially, but we're into some labor contraction. So it could get more and more focus on the major employment numbers. So, yes. And then remember, as the wonderful members of this community put out yesterday when I said when does earnings start, because I didn't have it in front of me, it starts roughly next Thursday with some of the banks kicking it off. Let's see. Could not agree more myself. This rally needs to prove itself. For all know, this FOMC pump could be sold off tomorrow like the last few minutes. We could still see, a slight push or a choppy push. Remember, right now, this is a very weak move with the cycles getting to the top for another potential rollover play. And remember, when the cycles, I want you to pay attention to this because I go periodically stressing stuff and then I won't talk about it for a bit because I'm hoping it gets ingrained in the regular people here because I can't teach everything every day. But remember, when you get the cycles lining up weekly at the top and daily at the top, now they have not rolled over yet, it really lends favor to the next major down move is more substantial when you get the cycles in alignment. So far, they haven't been in great alignment. Remember, weeklies have been at the top, dailies have been at the bottom, dailies now closing at the top, and weeklies still sitting there. All right, NASDAQ. Remember, this potential double became a triple. I just left this on the chart so I could comment on that. And you see even here, this is why. You break above, boom. Break above, boom. This is not the kind of price action you want to see to try to get long. There are too many fake out moves. You finally got the break above, and this was a tough retest to buy. The best way to do this is when the S&P also confirmed and held higher. If you're trading the NASDAQ, you sort of got, all right, we got the S&P holding above there and the nice retest in. The NASDAQ didn't pull back hard enough, and I can try to do a quick long play, but then back to test that key level again. So guess what I'm watching? This level, 11,850. We break below that, roughly the middle of the zone with this low, and this key closes around 11,795. We start getting closes below that. And I'm not talking 5-minute closes. I'm talking at least hour closes. Then I'm watching for the potential breakdown play going into tomorrow morning. Unless we get something really bearish coming out with Europe and we reverse and then break through, then it could be an overnight shake and bake play. And why do I like this really nice? Because we have two significant levels here. Key closes. Don't line up the highs and lows. Key closes. So now we have a really nice horizontal channel that's been confirmed. This was the breakout. This was a reconfirmation. So this area is now takes on a horizontal higher probability. What that means is if you start breaking below the midpoint, easily we should retest the other side. And then if we start breaking down there, you're also into that clear path move as we've talked about. Now, we only got 11 minutes left. Doesn't look like we're going to get the 4-hour or daily close above that. I'm really watching for that daily close with this weak sauce move above that 62.5, which doesn't look like it's going to happen. If somebody wants to remind me in 10 minutes to check on it. So now I don't have the statistical favorability yet. Cycle's still turning up on the daily. At the top on the weekly against the weekly rotation zone. Could we still get some more upside? I'm especially if we do move higher, the NASDAQ would be looking again to potentially retest this more than the S&P. And remember, the NASDAQ is more volatile, so you can get more exaggerated moves. Dow, this is weak. This is just weak. Okay, you have two tops right here against the daily rotation zone. Won't even get the close above the 50 here. And this, now remember, this potential double, never even confirmed off the table. The Dow is just some ugly price action. With this, I have to lower this. That's the breakdown area. And I'm lowering this a little for the breakout area. So about below 3989, 3990. Watching the middle, which is roughly the harmonic, 30,900. And then the breakdown zone would be 30,800, 30,808. Because it couldn't even get above this. So that's what the overnight Russell. This turned into a triple before it hit the double. So that's not, you have to pull those targets off. This is just another, Russell again couldn't sustain anything above that daily rotation zone. Now what's interesting is all these rotation zones are pretty much softened up, so we could get that little minor pop higher, but I need to get the follow through price action. The DAX on the daily, in a distinct inside bar, but if it does pop above today's high, majors 12,780 area. Below the low, retested yesterday's lows in 12,280. Crude, yes, we finally came down. I put back on the harmonics. Remember, we closed just below the 62.5, which favors statistically a return to the 87.5 to 100. We've just confirmed that. That's why I put them back on to verify. And we came back down to the harmonic, and there was this was a little valid 15-minute double, which that trade's over, by the way. That's why I don't have it on here, but if you want to see how that played out. And it was more aggressive targets. Why? Because you still overall have the long-term trend up, and that the final target came in really nicely with this ledge. But even if you use this one, it's virtually the same when they're that close. So that was the only thing against that harmonic cluster right there. And just the statistical return, that 37.5, which was also provide that cluster if you... Hold on. Let me just show you again. See how you had all this stuff right. Did I get that lined up right? Right in that same vicinity. So major support, if we do another push lower, we have the rising 200, the key low from back in April 11th. So that's what we don't have a long-term bottoming pattern. The aggressive trade would be on a close or a break above today's high that was followed by a daily close above that, but that would be a return to about 105 only. I'm watching for a longer term, at least bottoming pattern, or we have this major double that would need a weekly close for me. A weekly close, not a daily close. We also have the weekly 50 right there. What else? Oh, by the way, gold now pretty substantial breakdown again today. So in my book, we do have cycles to the bottom, but it's lighten up before adding again on any rallies. And this potential double is off the table. Gold, no traction. Silver, though. Silver back down off this harmonic, potentially short-term bottoming pattern. So I'm watching for a breakout play above today's high with then a potential roll into a move back to the rotation zone. Copper, nice little spike down 32,329 and a strong reversal on there. And a close above on a daily basis above today's high would be a potential bounce back, short-term bounce back play. Notes, I talked about watching for the pullback move for a potential bigger pattern setting up. We've now just dropped below that 25.5 level. So if we do continue a rally, it should be interesting to see if we can get a little bigger note pullback. But where I'm watching is now, because we are below that 4-hour rotation zone, if we do break below about 118.26, I'm watching for that pullback to 118.05. And this is not something to short from my perspective. This is looking for another long setup and then possibly a bigger inverse head and shoulder setup. Dollar index pushing up, hitting that next harmonic, just spiking slightly above it. No great pausing bar yet, so I'm holding off on updating those harmonics just yet. So there, I wanted to touch on Euro US dollar. For anybody playing the shorter term, there is still now if we rotate back down into this area's 101.70 area, it turns into a triple bottom. But if this holds, and this is on a short-term basis on a close above 102.014, then we have a little short-term double triggered, which we get that pullback in the dollar index. So that's the only thing I'm looking at there. VIX was interesting. VIX, even with this choppy sort of weak sauce rally, pretty substantial reversal. Now you don't have the double. This is now a completely valid triple. If we do break down tomorrow, the next major support, let's just see where these minor harmonics give us. So the next major support would be about 25.50 to 25.37. And you have this little prior breakout area. So that would then, we'd work on a little more sustained rally. But I thought the VIX had a pretty strong reversal there, and daily cycles not yet at the bottom. Hey Lauren, how you doing? Yeah, you are doing more teaching, I know, because I'm going back to revisit the videos. Why? I hope it's beneficial, Patrick. Hey, thank you for the super sticker, Lauren. Thank you. Big shout out to Lauren. Yo, what a good day. I'm glad you had a good day. Let's go. I like to hear your thoughts on LIN. Very short-term bull and O'Reilly. Few-day rally. We can take a look at that. What's the indicator and settings? It's a stochastic RSI 833. I went over that in another video. Coco, you're too worried about capitulation moves. That's not the only kind of bottoming pattern you can get. And you're thinking way too far ahead. Do you use tick charts on intraday trading? Depends on your time frame. I used to when I was really scalping the S&Ps years ago. I used to use a 144 tick chart with a couple of interesting setups on there, but I would not advise that in this kind of market with this market depth. You're better to focus on a 5-minute chart at the minimum. If you need to drop down, if we have momentum, then drop to 3 or to 1. But I would not recommend a tick chart in this kind of environment. Oil is forming a cup and handle. Then I'll get back to some stocks. Oil was forming a cup and handle on what time frame? That's an inverse cup and handle. Again, I'm just watching for another rollover play to retest the slow area, but there's nothing great there. All right, let me get back through. Let me see what else. Let me get back through some comments here. Amazon. Amazon put spread 195 for a breakdown play. There's just not a great topping pattern for my book yet. We're up against this rotation zone. The one thing you don't want to see with Amazon if it closes above the 62.5 level, about 119, because then I'd be watching for a run back to the 200. Again, can't give you specific position advice, but that's what I am keeping an eye on. So you see here, and that's the 50 on the daily. So we break through. Remember, we've had some pretty decent strength in mega caps. If that continues tomorrow, for my book on Amazon, it's a breakout play for a retest of the 50. You get the close, then above the 62.5, it can be rolled into a bigger play. Other than that, I don't have a major topping pattern, and cycles aren't at the top on the daily just yet. So that's my take on Amazon, but that doesn't mean it depends on the time frame of any put spreads. Now, the 195 put spread at some point, depending on what month you're doing it or what week you're doing it, once we get a rollover play, could be really nice because we've got a 1, 2, 3. I'm just going to call this a quad bottom. It could be a 5 bottom if you separate this, but it's a quad bottom, which this area has tried to hold up. If you break down below that, the cluster's coming in at 94.75. So that's a really nice structured. Once we start getting the rollover play, that could be a nice put spread. Let's just peek in at GME again with their stuff. I bet you this is going to be a fantastic gap fill play on GME. That's a weak bounce. I mean, there's no reason it should bounce. That's just leftovers from 2021 playing. Oh, look, it's a stock split. Let's all rush in and buy it. But that's a pretty weak bounce. But I'll be watching for the play there. Thoughts on Tesla and Netflix? Tesla, again, choppy day. Nothing's been invalidated with this double. Nothing's been invalidated. Short term, you have this. It's the $700 mark. You break above that, you got your 4-hour 50 at the first target, 707.74, 715.27, 724.79. Then the rotation zone, pretty much ignore this. It's gone flat, which means we're in the consolidation. But so you go to the next bigger time frame, and you see the final double target is right by the weekly rotation zone. So that's still the play at the short term, unless it tanks. My early warning sign: you start really breaking down below about 685. Key support 667. You get a close below there. And by the way, if you want the close for the double, hold on, you got to do it this way. The close would be about 664, but you start getting a close below 667, it's pretty much done. So until that, I mean, even with cycles at the top, they're starting to roll over. But that's still statistically your favored play. Even the long term, I'm very bearish on this. I got to go with the patterns. Netflix. This. No, nothing. Sorry. I mean, this is where when I don't have a pattern, the only pattern right here is this. You have, you start getting a bullish run in the Nasdaq, maybe you get an upside breakout, but here's your pattern. So you can use that as a stop level unless you're trading this short. So that's your pattern on the short-term basis, but on any other basis, it would be a breakout. If this didn't trigger, it would be a breakout play. You have now a triple topping thing here above 186. But you're not into a real great move in your stopping pat. You have a breakdown zone at 187.75 and then another stopping point about 189.50. So this is difficult trading. So this would only be something, if I was going to look at it, it'd be on an intraday basis. So that's the only thing short-term pattern you have. Remember, when I can't find something, this is my personal preference. That's why I don't get married to a stock, because all right, I'm going Netflix. It's like Bueller. It's like yeah, if I was intraday going to trade it, the only thing would be that breakout or breakdown, but then feel like I'm forcing something. Versus a better setup. I mean, Tesla's a better setup than that one. We got Occidental Petroleum. I have to take those off because it played that out. Well, boy. I get. I mean, long term, you still have, what's interesting to this is you're still holding the weekly rotation zone, but you start breaking below this 56.80. If oil starts breaking down, this could form a pretty substantial head and shoulders. So I'd keep a tighter stop on this. This would be, if you're trading it from the long side only, this would be if this more substantial head and shoulders triggers, I would be out of a long position from my perspective. You have to analyze your own thing, and I don't know where this is going to break. I'm just hypothetically doing it because we don't even have the net line confirmed yet. Because this could, all right, if you break back up, then this might not be a head and shoulders top. But you start, and if you want conservative, wait for, roughly a close below about 54.35. Why 54.35? You have that gap open. You have that close. You had this little gap open and the close above there. You had this gap open. This was a gap. And a rocket move away from it. You've retested that level with two lows. So you get a daily close below that. Not only would it confirm the neckline, it would trigger the head and shoulders top. Then I'd be watching for the bigger pullback. If this is not something you want to short, and a lot of people don't short, especially in this environment with oil stocks, where would I be watching? The first, and again, this first target area isn't done, but I'd be watching in this vicinity with a pullback to the 50 on the weekly. And look at that first target. And again, that target's not confirmed yet because we don't even have the neckline broken. But that target's going to be in the vicinity of the 200 simple. Okay? So that would be, if this topping pattern does trigger, I'd be watching for the more substantial pullback, and from a long perspective, lightening up or getting out completely, and then looking to, on a bottoming move down here, reestablishing a position. Let me know if that makes sense, John. Sorry, just going back through the comments. Christoph, I'd like to hear your thoughts on LIN. Uh, Triggered a buy pattern today, a short-term buy pattern. This was triggered, so I'd be watching for at least the partial gap fill. I would not ignore this 4-hour rotation zone to definitely move up a stop. And the stop would have to be below yesterday's low. Now that would be on a short-term pop play. Because you start breaking back down on LIN below these two lows. Again, not a double bottom, two bottoms, but you have a pretty reliable area, and it looks like you almost have a significant level in that vicinity. Very close to a significant level right here. And how do you get that significant level? You want another little teaching moment? See this key gap open reversal move. That closed just above it, but then you have an emotional candle, close at that level, gap down, another close at that level, emotional candle run away from that level, and then retested in that area with these two lows. Why is that important? Because you generally get reactions off a significant level. You get emotional moves. Emotional move. Could be an emotional move and then another rollover play. But if you break below this, I'd be watching for the emotional move back down towards the weekly 200. So on any bullish play like this little play, you have a decent stop area. You have a very decent stop area. Okay, and you do have cycles turning up. So you could be a little pop before the next rollover and a retest of this area. But besides a short-term play, would not be super bullish on this. O'Reilly, again, we're on the weekly right now. This is a nice little breakout play. I was keeping an eye on this, and we got the close above. I just don't have this chart marked up on this platform. But so this is you have breakdown, retest that level, retest that level, retest the level, retest the level, which is in the vicinity of the 200, and then finally the breakout of that level with the close above there, and you do have a gap overhang right there. So I really like this for a potential medium-term play to the upside with my preferred stop level. If you wanted something really tight, you'd have to keep it below today's low on a closing basis. My preferred stop would be a little further away with smaller position size. So that's why I like that. Let me just get back to the weekly, and you see it here on the weekly. And that's almost a very sloppy double on a weekly. Let's measure it out. It hit that 75. It's got the bigger pullback. I would actually use conservative targets on this, by the way. So these are areas. Now let's go back to that daily. So this would be a key stop reduction. And look, you start getting the breakdown zone, second target, and then I'd actually take the third target being the gap fill in front of this. And if you wanted to, just hold on to a very small position size for that third. Another area to minorly raise a stop could be this breakdown level too, because that's going to be a key stopping point, potentially a key stopping point. Let me know if that makes sense to everybody, not just Christoph. Let's see. RBLX. Yeah, I was looking at this earlier today. This yesterday triggered the double. Pullback area is we can actually go a little deeper than this. This is the breakout area, but anything substantial, remember, I watched the candle bodies. I was watching this because, all right, you got the confirmed here, retest, or did that confirm it? I don't remember. 36.43, no, 36.42. That was turned it from a potential to confirmed, and then this triggered it. Now I'm watching for the pullback play, 36.07 to 34.47. And you're into it somewhat of an advanced clear path to the second target. So that's, I am keeping an eye on that higher. And it would not invalidate that pattern unless you got a close below 27.23. But if you needed a tighter stop, if you start breaking down below this 31.80 area, then it would be that could be an earlier area to bail because you're going into a clear path move back down. Yeah, and I didn't want to get into all that, but you already know how to play that, Christoph, with the gap fill retracement. So there's enough stuff that you don't even need to look at that, but you could, again, the more things, remember, just because probabilities aren't additive though, but it's just one more thing that did trigger. Let's see. Oh, in the weekly Roblox, this is the only negative to it. Your R against the weekly rotation zone, but at least it's flattening out and right by the stop reduction target. Keep an eye, though. It could take a while because you got the weekly cycles at the top and daily cycles not yet at the top. So this could easily hit that first target area. So I would be substantially aggressive moving up the stops on that. Again, I don't know how you've structured your trade. This is just based off my analysis. I missed the minutes. The Fed minute, was it good or bad? It was very hawkish. That's why we had the 75 basis points jumping back up in the Fed Watch tool. I still have to put, unless we get the CPI next week collapsing substantially, I'm going with their hike in 75 basis points. I know it's too late to ask, but I want to know how to know there's a buying and selling signal. On which thing? I cover multiple trigger points. You're welcome, Wavy. There's a couple. Some of the ARK stocks didn't follow through today. Some of them did. Again, Beam off the harmonics down there. Beam triggered back on the 21st. Sorry. Let me get to the daily. If you're trading this off the daily, it actually triggered on the 23rd. It was the week of the 21st. And this is exactly what I mean. So you see, this pulled back a little more in the candle bodies, but you see here, catching on the daily rotation zone trigger, pull back, catch on the daily rotation zone, moving up. Now, this is where you move up the stop. You've already hit this, and you're getting the reaction there. And this is actually, you don't even have to use the harmonics on this stop. This would be, I'd have a stop placed below this low on a closing basis. But the cycles aren't yet at the top, so this could easily have some more room to run higher. You don't have a lot of stopping points here. And look, the second target is right by this little market rotation. But you've already hit the first target right there. And weekly, you've already smacked into the other side. Remember, you close above the bottom of the weekly rotation zone. We start focusing on the areas towards the top, and this just hit the top with the stop reduction. Now, weeklies are at the top. Once this dailies get to the top, I'd be much more aggressive than you were into a weekly clear path move. You're welcome, Paul. Hey, Christoph, thanks for pointing out Beam. I did know that I had that on my other platform. I just never marked up the chart on this one. It was one I was glancing at. There's lots of different buying and selling signals. There's not just one. Like I'll talk about percent B, I'll talk about doubles, I'll talk about uh, especially triple divergences. There's lots of stuff. There's breakout plays, breakdown plays, shake and bake plays. There's other plays I don't even teach in here because we'd be here all day. I mean, you stay tuned to the channel. You'll learn. I'm sure people will tell you repeatedly how much they've learned just by tuning into the videos every day. Bitcoin hit the first target from this double top and nothing's changed. Long term, long term still very bearish. Short term, the only thing that makes me short term bullish is a close above 21,866 for a potential double play to the 50 EMA on the daily and on the weekly, back to the weekly rotation zone before another substantial rollover play. There's your Bitcoin, but that's not triggered yet. All right. I'm tired. Only got 4 hours of sleep the last 2 nights because of major storms here, and the dogs don't like severe thunderstorms and flood watches and everything else. So I'm a little tired with only 4 hours of sleep, and these markets I find exhausting because you just can't put on a position and go to sleep. I think Christoph has really mastered some of this stuff. One of our longer term viewers. Anissa, I hope you're getting better at some of this, mastering some of this stuff too. Again, tune in. Why this is so great to tune in, because even if you don't trade a market I cover, it doesn't matter. You're going to learn a methodology for doing analysis. And enough people don't have a concrete methodology. A methodology. I can't even speak. Don't have a, I'll talk about things because you have to be consistent with your analysis. Otherwise, you don't have any way to gauge how you're doing. You're welcome, Christoph. Thank you. You have a wonderful evening over in Germany. And again, Christoph, if you have great information, what's either going on in Germany or with the EU or something that I don't touch on and you feel it's important, please do continue to share it. Same with you, Anissa. You know what? This is the point. We share information here. Just like other people put in stuff that I might have overlooked even in the US of A. So please don't hesitate. All right. I think everybody should have a fine, wonderful evening. We roughly have a game plan for tomorrow that we will fine tune in the morning. Remember, just as a reminder, do not ignore ADP comes at 7:15, which is minor, but 7:30, you got your jobless claim, so we could see a little potential volatility at 7:30. So that's going to be the big thing tomorrow, 30 minutes before my live stream. So we'll get that out of the way, and that'll enable us to really fine tune a trading plan for tomorrow. And then the only other monkey wrench is Bullard and Waller speaking at noon. With that, I'm going to wrap it up. Everyone, again, have a wonderful evening, or if you're in Europe, sleep well, get up for European Open and trade it well, and I'll talk to everyone later.